2024. What we're doing here with this particular report is we're looking at the best stocks that are currently trading that are domiciled inside of the United States. That is what we're looking at for the Heavy Hitters Report. Nothing international. We're not looking at mid caps, small caps, micro caps. We're looking at the biggest stocks inside of the United States showing leadership roles. So that's where we're going to start. First things first, I want you to notice that as we go through this, if you were here with us last week, you're going to see a lot of repeat offenders. That's typically how trends work. Trends continue to trend a lot longer than most people expect them to. And the trend over the last couple of weeks has definitely been lower volatility stocks outperforming, meaning a lot less tech, consumer discretionary and communications, a lot more consumer staples, healthcare, financials, real estate, and industrials. That's exactly what we find ourselves in today as well, outside of Palantir. So we're going to start with Palantir. Added to the S&P 500 on Friday. We've been long Palantir for weeks now, owning it above 27.5. This trade is working out well for us. One of the few growth-related trades that we put on in the last 8 weeks that is still pushing up and to the right. Higher beta stocks as a group underperforming lower volatility for weeks on end, coming up on 2 months now. So we've drastically reduced the number of higher beta stocks we've bought over the last 2 months. Palantir, one of those stocks, though, that is performing well. Sitting anywhere between 50 to 100%, depending on where you got filled. We're holding this for the bigger move up till 40. We have expirations going out to November. What I'm focused on here for Palantir in particular is simply turning this trade free as quickly as possible while letting the other half run towards that $40 price target. I do not want to sell this position early, particularly with the bullishness coming in today. S&P 500 inclusion as well. Really focused on trying to take risk out of this trade. It's one of the few trades that I have on my books right now that are higher beta, that are completely still risk on. I've taken nothing off of this trade. So the quicker this can move to 100%, obviously the better. Palantir, great company, apparently good enough to join the S&P 500. I like buying these 52-week high breakouts. They're not always going to work, but there's a line in the sand, right? You know where you're right, you know where you're wrong. These things break back down in underneath those 52-week highs after stamping out the breakout. Maybe you're too early, etc. This one in particular worked out well for us. The next one I want to point out is American Tower Corporation, something that we had talked about earlier today inside of our community. If you missed the real estate trade, XLRE, we have a position on XLRE right now going back about 3 weeks. It's working well. The real estate sector in particular is going to have lower liquidity on the options chain. It's going to be a tougher trade overall. So you're going to have to get crafty with what you're looking to trade within this sector. American Tower Corporation is one of the few real estate names that actually has liquidity on the chain, and therefore it's a decent setup. We want to be long American Tower Corporation above 232 with a price target of 280. One thing I will say is if you're already in the real estate trade, the XLRE trade, think about sector concentration. We talk about this all the time inside of the community. If this particular sector pulls back for whatever reason, you do not want to get stuck in 3, 4, 5, 6 different trades and get screwed 4, 5, 6 different ways. So really focus on not having too much concentration in one particular sector, particularly real estate because of the liquidity issues on the chain. But if you missed the original real estate trade, American Tower, once again, a very simple setup. Not necessarily saying it has to work 100% of the time, but you know exactly where you're right. You know exactly where you're wrong. Something that most people never get down. You need to know where you're wrong on these trades. Below 232, we're probably too early. Above 232, there's a good opportunity that we're at 280 over the next couple of months. So American Tower Corporation, the next one on the chart, or the report, excuse me. Philip Morris, a trade that we've taken. We've talked through on this particular report multiple times. We're up into all-time highs today. Just a very simple 7-year base breakout. That's all this is. Philip Morris, we took some calls. It's working well for us. It's a slower moving trade. If you're not in this trade and you want to grab it, you know, the contracts themselves are not up a whole lot right now, so there's probably still an opportunity for you to get them, although you are buying at all-time highs, just pointing that out. Philip Morris is another one of those consumer staples related names that for whatever reason the market is buying right now, right? Higher beta not performing as well against lower volatility. And with this seasonal September whipsaw volatile price action, consumer defensives are still rising. Therefore, we're buying these breakouts because we're still in a primary uptrend. Philip Morris, the next one up that is performing well. The next one I want to point out, General Dynamics, GD, another one we brought up last week. Not necessarily ready to get bought yet, but this is a very, very buyable consolidation fractal up and over 300, right? 300, 301, 302. Wherever you draw your line in the sand, this is a continuation fractal. This is an industrial related name within the aerospace and defense industry group. Both of those working well this year. XLI is up, ITA is up, right? From a sector and industry standpoint, both of these are greenlit. General Dynamics has enough liquidity on the chain to get long. If you want to get long straight calls from an option standpoint, they're a little bit more expensive. Shares are also applicable here. Price target somewhere near 340 makes the most sense for me given the run up that General Dynamics had during 2023. I'm expecting this to consolidate and eventually move higher. So an opportunity for you to own both an industrial related name and an aerospace and defense name. Once again, keep in mind these are lower volatility at 1.35. They're not going to run 1,000% in a week or two. So you have to buy time if you're looking at options contracts. And if you're buying shares here, keep in mind the expectation set. You need to be able to hold these things for months at a time. These things are just typically not going to move super quick, but that's what the market is buying right now. General Dynamics, Philip Morris, things like this. Next one up, DUK. This is a trade that we've already put on, but I want to highlight because even though we are technically up and over the risk on level and the trade is on, there's an opportunity for you to get long this particular name if you want. It's a 2-year plus base breakout in the utilities-based sector, right? Not a sexy trade by any means, 1.27%, but there's not many utilities-based names that have liquidity on the chain. DUK, Duke Energy, is one of those particular names. Bullish momentum regime, trading above an upward sloping 200-day moving average. If this were a tech-related company, you'd want to own it if this were the setup. Unfortunately, it's a utilities-based name, so most people are sleeping on it. I do think there's an opportunity for DUK to move up towards that 135, 140 price target. Plenty of liquidity on the chain to grab this. Once again, just like the General Dynamic trade, though, don't expect this trade to take a week to hit 1,000%. These are going to be generally slower moving, lower volatility trades. So if you want to own these, go out on the chain, or if you're buying shares here, make sure your expectations are that you're going to be holding this for a couple months at a time. SPGI. I just want to point out that, yes, the market is scary right now. Mag 7 stocks are pulling back. We're not going to talk about that today, but there are still pockets of relative strength and absolute strength. Here's a financial name currently trading at all-time highs. It's not just everything is down. Higher beta stocks are for sure getting the brunt of the bearishness going on, but there are lower volatility and other areas of the market that are still persisting higher. And the question remains, do those lower volatility areas of the market continue to push the indexes higher, or will the weight of the higher beta stocks coming down crush the broader market? The question is still to remain to be answered. We don't entirely sure yet. We're still in this seasonally weak period, so I don't want to draw a line in the sand and say it's time to flip full on bearish. Primary trends are still up, but we are starting to see some cracks in some very important intra-market relationships that could be leading to bigger moves to the downside in the market if they do not resolve higher over the next 4 to 6 weeks. As you can see here, MasterCard, another one of those financial related names that's pressing up in towards potential all-time highs, something that we've talked about over the last few weeks. Another slower moving name, trading north of the 200-day moving average, sloped up within the beginnings of a potential bullish regime. 1.22, one of these slower names that we've looked at. MasterCard and Visa both regularly track each other. MasterCard, clear risk on above 485 into all-time highs. Price target 575 to 580. Once again, if you want to own this, go out on the chain, buy some time. But there's plenty of opportunity here if you really want to go out and own some of this stuff that's working, particularly if you have the anticipation that maybe this market is just experiencing a temper tantrum coming up to this interest rate cut, because it happens to happen every single summer. We'll see once again how this resolves. But for those of you that are in the mindset that maybe this thing can still continue higher, there are pockets of opportunity. A couple other stocks I want to quickly talk through. ADP, a little BRB action going on here. We did start an ADP long just a couple of days ago. We like this 270 area for a new all-time high press up towards that 300 to 310 level. Guys, all of these setups are relatively the same. These are 2+ year base breakouts. You don't need to reinvent the wheel here. ADP is going to be an industrial related name, even though it says tech. Always make sure which ETFs own it. Trading north of an upward sloping 200-day moving average and in the beginnings of a potential bullish momentum regime. We like ADP up towards that $300 area as long as it can hold the pivot at the 270 area. IBM, another one of the names that are showing up on our list time and time again. Not necessarily a super easy trade to take, but pushing up into all-time highs. Not all-time highs. decade highs. We are almost near all-time highs, actually. So an all-time high breakout. This is a 12-year base. If you can imagine that, think of names like Intel that are absolutely getting crushed over the last few years. On the flip side, you have IBM pressing up in towards those all-time highs. So an opportunity here to get long. Yet another tech potential AI leader, IBM into all-time highs. Use the pivot near 205 to get long. Draw your levels. This is going to be a little bit slower of a mover for a tech name, but still, for those of you that aren't afraid to own a little bit slower movers, IBM showing consistent strength on an absolute and a relative basis over the last year. Two more trades I want to talk through really quick, then we're going to call it a session here. First one first, we want to talk through, we can look at MO. Just like Philip Morris, for whatever reason, cigarette companies are a big hit right now. Very obvious stage 1 into a potential stage 2 above 55. Probably a day or two too early. Price target there, $70. Just like Philip Morris, though, take your time when you're buying these. 1.15 ADR, very slow mover. Probably not the right trade to take if you're expecting 1,000% winner in 2 days. Also, probably not the right trade to take if you're already in Philip Morris. Industry concentration risk is real. Philip Morris, Altria Group, PM, MO, relatively the same ticker from an industry group standpoint. Own one or the other. This is another good consumer defensive name to own. And the last one I want to talk through is Coca-Cola, a trade that we took and we were able to take free, which is the whole goal of what we're trying to do inside of TTI, remove risk as quickly as possible from these trades. Coca-Cola we bought not at the 67 flip, but during the consolidation phase. So remember, these slower moving trades, you can take a little bit more time getting long. You have benefit of that lower volatility on your side. Coca-Cola, for whatever reason, pressing up into all-time highs. Once again, this is what the market wants to own, and so we're going to want to own it as well. Above 67, our price target there in between $75 and $80, currently trading $72. Completely free trade for us. We were able to turn free at the beginning of last week, and now we have through the end of the year to hold these things with no account capital risked, just to see how far Coca-Cola actually runs. So once again, this is our heavy hitters report. Send these reports out every single day. If you're new to the channel, feel free to sub. We talk through these. And if you want the actual trade ideas with the options contracts written up, risk on, risk off stops, and some additional commentary, services available. Link is in the description below. My name is Hamilton. I'm here at the Trading Initiative. If you like this type of content, please like and subscribe. Leave a comment below. Let me know what you think. Is the market about to roll over? Are lower volatility stocks going to continue to help prop up this market? I have no idea, but we're probably going to find out within the next 4 to 6 weeks. As of right now, lower volatility is what's working, and that's what we're going to own.